You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it is Friday. It is noon Central. It is 1 p.m. Eastern. Do you know what's popping off in the vol markets on this Fed week? Well, let's find out together, shall we? Because it is time for Volatility Views, the premier program for volatility traders. My name, of course, Mark Longo from the THE, optionsinsider.com, as well as from the network upon which so many of you have been binging this week. Remember, like what you hear, this, anything else on the network, throw a like, a star, a rating, a review. If there's a sponsor on a show that has something you like, you want to try it out, and you liked it, let them know. That's the best way to let people know, hey, you know, they're reaching you here on the network. They should keep doing so. It's a great virtuous circle we have going on here on the network. And of course, if you want to expand that circle to maybe, I don't know, include a wee bit of extra content, like let's say, I don't know, an awesome debate with our buddy on this show, Mr. Dr. VIX, as well as his nemesis in life, Miss Carly Garner, who's always holding court on nat gas ladders and everything else. You guys and gals asked for it in the pro. Never let it be said we don't give you folks what you want. You wanted a two-person debate-style pro Q&A. We gave it to you. Had to separate them virtually a few times. It was intense. One of them may have pulled a knife. I won't say who, but you should check that one out. It was pretty awesome earlier this week on the pro Q&A session. Where can you find all that awesomeness, as well as, heck, you get over there, you get to join us right after this show for Options Oddities, all the crazy, unusual activity. Only one place to go to unlock all of that goodness in your life. Also, coming up on the last week of March, that means another pro trading crate going to go out the door from this place pretty soon. You folks are robbing me blind on all of my goodies. You know what? It's okay. TheOptionsinsider.com/pro. Spoiler alert, I'm looking at the pile of goodies we send you folks right now. And even though we've been doing these boxes for years now, it hasn't really budged. We have a lot of stuff to give to you folks. So head on over to the land of the pro. Get your name in the hat. TheOptionsinsider.com/pro is the place to go to learn more as we go around the horn. See who's joining us on this fine Volatility Friday. First off to the dark and stormy, some might say terrifying, some might say not fit for human habitation shores of Maine, where we are joined once again by the rock lobster, Mr. Andrew GIOVINAZZI from OptionPit.com, maintaining his lone vigil in his tower on the shores of Maine. Mr. Rock Lobster, welcome back to the show, sir.
It is good to be back. It's also good to be on here, and I actually got a guest. I just don't have to co-host it with you. I got a person of quality guest hosting today.
A P.
Not to disparage you, Mike.
A POQ, a person of quality, eh? Well, let's see who said person of quality is, because we are also joined this week by our good buddy, Mr. Jim Carroll, now the Senior Wealth Advisor and Portfolio Manager. He's got a dual business card, listeners, over there at Ballast Rock Private Wealth. Joining us for the first time since the early days of this year, back in January, when we were breaking down his vol year in review over there for 2023, which if you are on the pro side, you did get access to. We did send you out a copy of that, so that was pretty fun. I know a lot of you enjoyed that. Mr. Jim, welcome back to Volatility Views, sir.
Thank you. And I take umbrage with the person of quality. I doubt it, but I'll do my best.
Well, you know what? People have taken umbrage at worse things on this network, so we can roll with it as we keep on going right on into a little bit of the old Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody. Welcome to the Volatility Review, the portion of the show where we break down what the heck was going on in the vol markets this week heading into today. And as I mentioned at the top of the show, it was a Fed week. So you knew all eyes were on Powell and company. They were waiting for those magic words. Are we going to get the 3 cuts everyone's hoping for this year? It seemed like what the Fed actually said wasn't as explosively dovish as perhaps you might assume from the market's response to it, because the market was like, okay, 3 cuts in the can, here we go, rally ho, new record highs almost every day this week, pretty much with the exception of the today. Today, markets taking a bit of a breather from their explosive upside move post-Fed meeting. S&P kind of off slightly now, just a couple of handles, so kind of in vacillation mode, was trying to fight its way north earlier than the session. Couldn't really maintain it. The Dow, the newly minted, newly rechristened Amazon Dow, out there at off about 0.5%. So giving up a good chunk after having a very strong rally this week as well. One of the lone highlights, one of the lone green spots on the day out there is our friend out there in the NASDAQ, up about 0.25% today, so managing to buck the trend. We'll see if that lasts or if this looks like a little bit of red sucking sound is going to suck NASDAQ down too. Speaking of things getting sucked down, our old friend small caps. We've been saying for a while now, small caps kind of the thing to watch out there this year. Just marching to the beat of their own drummer, day in, day out, session in, session out, doing their own thing yet again. They're saying market's mixed to kind of, you know, we're going to sell off a full 1% today. So IWM taking it on the chin out there today. That's the context for which we kick off the show here today, listeners. Even though we've seen a little bit of mixed action out there on the screen, obviously a Fed week, people usually price in a fair amount of juice going into those events. And unless something crazy happens, that juice tends to come off, and that's pretty much what we're seeing right now. VIX cash at about a 1280 when we kicked off the show, so well shy of the 13 handle. I don't think anyone had a 12 handle in our prognostication, but we'll look ahead to the crystal ball. I don't want to get ahead of ourselves here. That puts us down almost 2.5 points, about 2.4 points from where we were this time last week. VVIX pretty much giving back all of that juice that it had. It's pretty much back down to the level where it was a few weeks ago, where we said, you might want to start paying attention here, because it doesn't tend to hang out in this mid-70s range for very long. It tends to bounce away from it. That's exactly what it did. It bounced all the way back up into the mid-90s, now coming all the way back down post-Fed, down 15 handles back to a 77. So are we resetting the gun for yet another bounce in vol, or is this going to be the period of languishing? Are we getting early summer? Is it forget about sell in May and go away? Is it sell in March and just go away and do something else until the election? Either way, a lot of intriguing stuff to parse on the show today. We will start with our guest, Mr. Jim. Jim, I know you've had a big kerfuffle on Twitter of late about the mid-portion of the vol term structure. We'll get there in a second when we get to the vol futures portion of the show. But outside of that, sir, what is catching your eye out there this Fed week, the market's response, and indeed the volatility response to the market's response?
Well, you will recall that last year was the year of no fear, and the timeline has been extended. The Nothing Burger is still on offer. About the only thing we've seen, and our friend Andrew probably has more to add to this, but the only thing we've seen in terms of fear is VIX 9-day popping up above spot VIX a few times in this run up to this very important Fed meeting, but that has been swatted back down, and there's just not much in the way of fear or excitement coursing through these markets right now.
Does seem, at least for today, like it got a bit of a gentle malaise, unless you're hanging out in small caps land, in which case nothing is gentle anymore. Every day is just a rip-roaring plunge from the heights or just rocket ship to the moon, one or the other. There are no middling days out there in small caps land. Mr. Rock Lobster, same question for you. Obviously a Fed week, obviously a very active week. A lot going on out there. What caught your eye from a vol perspective this week, sir?
Well, we broke some trends this week. So we have had the annoying, what I would say, well, it's not annoying. The rally's been good. So if you're long, just about anything, maybe except for Russell, not Russell Rhodes, of course, the Russell Index, small cap.
Yeah, just sold that guy across the board, by the way, sold Dr. VIX.
You're having a pretty good year. Heck, you could even buy VIX and buy SPY, which is a little trade that I've had off and on here this year, and done quite well, to be quite honest. A lot of uses of the word quite right there. But this cycle was the first time we broke, and I'll probably put this picture up on Twitter in a second, where we broke the kind of up market, up vol cycle at a peak. First time since the mid-December. So my take on that from a trading point of view is, one, the market, usually volatility rises when you expect brisk two-way direction. So, and that's rising. So if you were a market maker trader, Longo, you remember, Jim, I don't know if you were a market maker back then, but yeah, I know you know your stuff about vol, but you're in the pit, right? And you're like, okay, if you think the stocks are kind of just creeping one direction, you don't have real reason to expand volatility. If you do think stocks can rip up, like, sell off and then they rip up, that's when vol jumps relative to the realized. So, because if you're trading, you're kind of looking at like, okay, how much are we moving every day? So right now, what it does feel like is, okay, let's say there's a little bit of vol coming back into the downside because we're higher. VIX at the money, vol at the money is getting lower. So natural expansion in a skew gets a little steeper on the downside. But I think now that from what the Fed was saying, they're not in a rush to lower rates. They say they might, and they've said they might for a while now. But I think the fact that that is now, again, in my view, again, his opinion is, since the government is spending massive amounts, okay, and we've been doing it for a while, but it seems like we really moved the inflation needle higher because of the current spend rate. We're spending more now than when all those people were thrown out of work at COVID. Why? I don't know. I don't have an answer for it, but we are. So I don't think that's going away. And the Fed's response is, okay, rates are going to stay up here and we're just going to let things roll. And I think traders and vol traders are not dumb. They go, that probably means we're not going to get any pleasant upside surprises in the short term. So if we're not going to get that bone crushing gap that we have been getting because of Fed action, that takes vol down. And I think that's why, VIX is now trading back in the 12 handle. And by next week, if we have more of the same, because we've got a couple weeks for earnings and numbers and stuff, then we're going to be back into the mid 12s and things will look extremely normal. VIX curve looks pretty normal. So I would say this is a tone change in expectation going forward from the Fed. This is the market saying rates aren't going down. We understand what they are and we'll deal with what they are, but we're not going to get that, the sugar rush jump that we've been getting if, we get some kind of news that just shoots markets higher. I mean, if the Russians pulled out of Ukraine, I think that would do something. That would everybody be like, woo, ceasefire Gaza. Any I think geopolitical news might do it, but I think we go watch the paint dry before any of that stuff happens. So I think the important break in trend, and that actually brings some lower numbers in VIX, and some of these little junky VIX puts could be fun again. Make VIX fun again. How about that? But it'll be on the down.
That would be nice. That'd be nice to have some of these junky puts. I don't have any right now. I have had some in the past and watched them all just go to die. Meaningless, pointless deaths, Mr. Rock Lobster.
Yes. You mean a 14 put can't pay? What is this?
Even some of my UVIX downside of late has been struggling. It's a funky moment in vol where vol is lower, obviously, but also struggling to really make those new lows that pay off all that fun stuff. We'll get to that. Speaking of low vol and volatility risk premium, a little bit of skew. Interesting stuff coming out of the CBOE. They put out this new newsletter. They have Mandy Zhu over there. I think she's been on the show in the past. She used to be, I believe, at Credit Suisse. And now she's their chief, I believe, a head of derivatives market intelligence. I might have to get her back on the show again. She put out some good stuff. Check out this newsletter. You should subscribe to it. I believe it's freely available. I know they send it to us over here on the show, obviously, but check it out over there, Derivatives Market Intelligence newsletter. So I usually talk a lot about structural vol in the market. Her latest one is about kind of what Rock Lobster was just laying down there a little bit, which is kind of these lower levels of vol we're seeing right now and what's causing that. And a lot of people are supposing that it's these income yield funds out there that are the amount of AUM in these funds that are harvesting covered calls, short puts, all this kind of stuff, listeners. Has exploded AUM from about 20 billion to 120 billion over the last few years. Some people are pointing the finger at that, keeping vol suppressed. She points out here, though, that if those are to blame, a couple of things. First off, a lot of these are covered call funds, so you'd expect the call skew to be a wee bit depressed. And actually what we've seen is kind of the opposite. Call skew is kind of juicy right now out there, going back to 2021 levels out there. Also, the vol risk premium that the Rock Lobster was kind of just talking about has increased quite a bit out there. Also, kind of the opposite of what you would expect if this were the case. So kind of an interesting nugget out there. She also points out some broad macro trends about vol and how vol is decreasing kind of across the board. If you listen to shows like TWIFO we do every Thursday, where, of course, we talk about broad volatility, not just in the equities, you can see that vol across the board in most of these asset classes, outside of some unique exceptions like crypto and nat gas and a few others, really is very anemic and has been for some time. So interesting reading. I thought I would point that out. Mr. Jim, as our guest, what are your thoughts on that? Kind of rebutting against this belief that all these income-generating derivative income funds, they were the culprit for the low vol we're seeing now, Mr. Jim?
Well, I think there are a couple of pieces in that puzzle. Look, if you see a lot of vol being sold in different structures, that's certainly not going to result in elevated volatility, right? That's selling pressure. But my observation, and I've done a little bit of digging around. A lot of the, and they show this chart with this dramatic growth in derivative selling ETFs and mutual funds. Most of the mutual fund growth has come from JP Morgan. There was an article in the Financial Times, JP Morgan says JP Morgan is suppressing volatility. But where is this coming from? A lot of this in my investigation is coming from a migration from structured notes and structured products that are manufactured by, large Wall Street trading desks and moving to, ETFs and mutual funds that have lower expenses associated with them and can be traded, unlike the structured notes you might get from, maybe Goldman Sachs. So my suspicion is that it's not so much that the market has expanded dramatically as the market share of ETFs and mutual funds has expanded. So I'm not so sure that this is the outsized impact that some people would make it out to be.
Speaking of outsized impacts, I know these products have an outsized impact on your trading world, Mr. Jim. Of course, I'm talking about the VIX futures, aka the volatility surface, aka the answer to all of your vol questions. It's lurking somewhere out there on the vol surface, listeners. You just have to find it. If you're big on the VIX futures, hopefully you enjoyed our mullet and Tulum episode from a few weeks ago with the Thompson twins. Got them back for after, probably since pre-pandemic we had them on the show. They live in that VIX futures curve, so check out that episode if you missed it from a few weeks ago, listeners. If you're knee-deep in the world of VIX futures, that world looking a little bit different coming into the show this week. Obviously, March rolling off the board, taking all of its fun, all of its goodness with it, and coming into the start of the show this week, we have April slotting into that pole position, which obviously that front portion of the curve giving up the ghost post-Fed as well. April down over 1.5, about 1.6 points, and May down about 1.3 points on the week. Even with everything coming down, we still have a 20 handle out in that October expiration cycle, right around a 2060 or so when we kicked off the show. So that's coming in. It was north of 21 this time last week. Obviously still frothy. Still a very healthy contango from April all the way out to October. So if you're into some of those strategies that like a little bit of healthy contango, this is certainly an intriguing time for you. Also, kind of back to what I would term a more reasonable distance between the cash and that front future. Remember, we were saying there for a while, the front future and the cash were not quite equidistant, but they were much closer to each other than you would expect, certainly this early in the life cycle of that front future. And now we're looking at about over 1.5, about 1.6, which is still not enormous, but I would say a little bit more into that normal category. But you know what's not normal, Mr. Jim, is all this madness that's been going on in the middle of the VIX curve. In fact, I know you got vol twit all a Twitter last week when you tweeted out, which one of you goofballs is piling into the VIX midterm futures? Is this one of those short in the front, long in the back trades? Obviously referring to our mullet and Tulum friends, the Thompson twins, along with an accompanying chart of just some of the funk we're seeing out there in this vol surface. I know this is your baby, Jim. I have budgeted you 28 minutes to dissect all the madness in the VIX futures curve. Have at it. And also, did you find the goofballs who were responsible, sir? Inquiring minds want to know.
I did not find the goofballs, but nobody was willing to fess up. But it was pretty fascinating to see, and it's kind of returned to normal, but a big jump. I mean, this is the ProShares VIX Medium Term Futures ETF, ticker VIXM. And, it was Tuesday of last week. And the volume just went, off the hook. We also had a fairly big volume day the next day. And, this is one that more or less trades by appointment. It's the flip side of ZIVB, which is the short medium term. And, it was just a little bit of a head scratcher as to what was going on with that volume. And I still don't know, but, somebody wanted to buy some long exposure out at the middle of the curve, which is pretty unusual, especially given that, other than this obvious election bump in the term structure. The term structure's really not suggesting that being long VIX futures is a good idea right now.
No, it is not. Those goofballs still up to their madness coming in. That tweet was over a week ago now. If you're looking at the term structure now, how is it shaping up versus about a week and a half ago in regards to the goofball specifically, Jim?
Well, it's really just about, let me see here. I mean, the entire term structure from front to back, has maybe a point of width from the lowest day to the highest day over the last, 10 days. So it really just hasn't done much of anything over that period. Sometimes in front of an important Fed meeting, we'll get a little bit of lift as people put some hedges on. That really wasn't terribly evident in the VIX term structure. As I said up front, we did see the 9-day VIX pop up above the 30-day VIX, suggesting that maybe there was some activity in the shorter tenors, but really didn't see it show up in the term structure itself.
Yes, 9-day VIX, which I do believe the Rock Lobster said was one of his favorite indicators going right now, which I do believe you also responded to and said you had some questions for him as to why. So maybe we can get into that as well. First off, Mr. Rock Lobster, sir, what are your thoughts as to what the goofballs are up to today and indeed this week out there on the vol surface? Do you agree with Jim? What he's laying down about these goofballs playing around in the middle portion of the curve? And then B, you did say, it might have been on the show a couple of weeks ago, that I believe your 9-day VIX right now is kind of your favorite indicator going. I know some people had some questions, including Mr. Jim, about why that is. So if you will, a corollary, an addendum, sir, after you discuss the VIX futures, why you are so enamored with 9-day VIX.
So, you know what? I have my own students, so I really can't quite keep track of what the goofballs are doing in the middle of the term.
Lots of goofballs to track.
I lean on like some of the guys on Twitter to tell me what they're doing in the middle. So what I do as just a lowly retail trader now is not that being a retail trader is lowly. Okay. Is I just reach back to like the old days, right? Where how did you price things if you didn't give a damn? So if so the easiest way for people, if they want to get a little better at trading options, is you put yourself in the liquidity provider's shoes. You take off your fancy loafers and you put on the crappy old sneakers that every liquidity provider used to wear on the floor, probably including Longo and myself.
So then you get very grumpy, you get angry at the world, you complain about every market moving against you and about every brokerage firm picking you off. Does that sound about right? Mindset of a liquidity provider?
I believe that sounds correct.
Maybe drinking heavily as well?
It's still fresh in your mind, I feel.
Full of anxiety and or alcohol at any given time?
Yep, exactly. Or I just run the series and do an attitude adjustment. Okay, the risk will go away if I have 3 cocktails.
Those are 3 of those. Jesus, one of those will put down an elephant.
Well, I was younger then. I drank more. Anyway, so depends how much you want to forget. But anyway, 9-day VIX is just, okay, we're looking at the shorter end of vol, right? And 30-day is, 30 days out. So if like trading, if I see that short-term vol trade at a premium to the back month, right? That liquidity provider is paying up for that stuff, right? And if you're a liquidity provider, you don't do that because you want to. Okay? You do that because you have to. And by have to meaning there's demand. And if there's demand, then the market itself, players, right? Remember, S&P 500 is everybody that's playing. It's not just like 1 or 2 people. So all of a sudden, there is real demand for demand for short-term options, and that shows itself when 9-day VIX is over regular VIX. Real simple. Because what happens is you do have calendar spreading opportunities and other goodies when that short-term vol is up there and we don't move. So, a calendar will perform well if the front end goes up and nothing really happens because the decay is so fierce. So there's a lot of cause and effect to all these things, and then the market moves and you see if you win or not. Again, from retail trader point of view, putting it on. But remember, if you see 9-day running over VIX cash, VIX 30-day, that means the market expects things are going to move. In my experience, mostly we have underpriced that move. And I think recently, if this zero DTE stuff has any meaning, I think, again, observation and traded, because I trade strangles with my students. Longo makes fun of me, but I think what's happened is I don't think the 9-day gets high enough anymore because it doesn't need to get high enough, because the liquidity provider, at least for right now, there's still a stream of short duration options, and the 9-day is kind of dying in the middle, meaning there's not a lot of activity there. And from an opportunity point of view, you can buy that stuff that's sitting at that level, because if the liquidity provider is buying 0-day or 1-day, they've got infinite gamma essentially, and they don't care. But for like retail, I don't really want to buy that because I don't want to trade myself. I don't want to trade the 1-day, 2-day. I'm more interested if we have events coming. I want to trade that, 8 to 10-day duration, because the theta is not fierce. If there's a little lift in volatility, it kills the theta. So I'm really running a strangle with no decay. So that's why I like that. And if anybody understood all the crap I just said, you're like, what the hell did you just say? So there is that, I think from time to time, there's good edge for retail to live in that sort of 9-day-ish area. And then when I see 9-day going up, I'm like, well, okay, even though the vol is going up, I'm expecting more move than their pricing. And the liquidity, in my view now, I don't think the liquidity provider has to jack that up quite yet when there's still supply coming in the short term. So that is why I like it. And right now, what does this indicator say, right? So you have the weekend coming. So normally the 9-day is going to get slaughtered because of the weekend effect. And we're trading at a 1066. 2 days ago, we were 15.5, 16 going into what the Fed was going to say. And that was a 1% move. We did 100 handles in 2 days in SPY. So all that vol was totally underpriced for that Fed announcement. And right now, they're letting the vol in the front month, that 9-day die, essentially. We got Good Friday next week. Vol is coming out hard because of all the days off. So it's going to show up as lower vol. And the liquidity provider is happy to let that stuff just go to nothing because nobody wants it. And the only reason people want juice is because they think that something's going to move. So again, historically, that is slightly more bullish than bearish in my view. So, like the Iron Condor setups, even though the vol looks low, maybe that 3-week Iron Condor doesn't look so bad anymore, right? Because we're just not going to do anything and the vol's going to melt. So you get kind of different action around these middle terms in the weeklies. When I say weeklies, like 2 weeks, 3 weeks for a retail trader where you don't have to get into the hairy zero DTE world, you get into the, what I would call more tradable, 3 week, 4 week, like in that sort of area. And that's kind of where we sit right now. So before the show, I was looking for putting on Iron Condor. I did not. I just rolled a couple of things. I'll see how it looks Monday because I know we rallied really hard. Maybe we get a pop in vol, but I mean, I don't see it for the whole week. I think we'll print a new low in VIX going into Thursday, unless something radical changes. I don't see what's going to happen. But anyway, so that's why I like the 9-day. It offers a lot of opportunity. It offers a lot of information, and the best information you can get as a trader, retail trader, is by understanding how to read term structure vols in SPX. Once you learn how to do that, it will give your nose a little bit better sense of what's going on. And mostly you just don't run into a buzzsaw. So like right now, I wouldn't straight buy calls in SPX because I don't think they're going to move enough, and I think they're going to decay too fast. As much as I think the market's going up, I think you want to find theta positive ways to do it. And there you go. That's my 9-day dissertation right there. Probably bored the crap out of every listener, and they're never going to log in again.
A big marketing webinar for SIBO 9-day VIX. Jim, I know you were one of the ones who had questions about his love for it. Does that answer your question, sir, or do you have more?
It really goes a long way to answering my question. I mean, it makes sense to me that Andrew is seeing kind of a sweet spot between all of the shenanigans in zero DTE land and the amount of time you're sucking up going out to spot VIX. He's kind of getting outside of the intense theta burn off and finding a place to put on some trades with a relatively short duration, but not so short that he gets burned up on reentry.
Let's see what kind of reentry we have going on, or maybe lack thereof, out there in the land of the mothership VIX options right now, listeners. And kind of like most of the major indexes outside of the rut today, we are seeing a bit of a breather out there in VIX today as well, at least from a volume perspective. Only a little bit north of 250,000 contracts on the tape right now, 257 to be precise. Not a heck of a lot, especially when you see the ADV has ticked up over 700,000 again, 705 right now. Puts it up a whopping 2,000 on the week, so not a huge bump given it's a Fed week, but it's something. Moving in the right direction, I suppose. What isn't moving in the right direction for all you put lovers out there is the prevalence, or perhaps lack thereof, of puts in our top 10. We were up to 2 last week. That has all gone the way of the dodo now. We're back to our usual structure now, listeners. 9 calls and only 1 put to be found in the top 10 in the VIX options right now, listeners. And you got to wait a little bit to find the put this week. $171 is what it costs you to break into the top 10 this week. That gets you to the June 45, so kicking it off right back at it to the upside, listeners. Number 9, coming back the other way, though, 172,000 of the April 16. So, dare I say it, a reasonable call, all things considered. Number 8, right back to the upside, 175 of the April 60s, one of my favorite strikes that's been open for a while. Number 7, coming back down again, a little bit of a dance, listeners. 182,000 of the April 17 calls. Number 6, our first and only put to be found in the top 10 this week. 184,000 of the April 15 puts. You like those, listeners? An intriguing strike, to say the least. A meaty one now. Number 5, 205,000 of the June 35, so back to the upside we go. And then some of my other favorites coming in for 4 and 3. Number 4, 213,000 of the AUG 47 halves. You know this 47 half saga. I've been talking about it for a while, since back when it was open for size in May and even earlier. It's on almost every month. You could look out there now and see. 213,000 of the AUG 47 halves in number 4. Number 3, right above it, 220,000 of the May 47 halves. Again, we discussed that one at length. The strike selection, the ratio that they're doing with that 1x5. There's a lot of things you could maybe poke holes at. Obviously, something else size against it. This is their way to structure protection against an aggressive blow up to the upside. Still interesting in and of itself. Obviously, we can only look at the options lens, and that's where we'll have our fun. Number 2, 244,000 of the May 35s. And the number 1 size position in VIX options right now. Again, given all the stuff we've seen open for size out here in VIX for most of this year so far, this is fairly reasonable. April 20s, 301,000 of those out there this week. In terms of action, like we said, not a lot lighting up the tape today, a little bit north of 250,000 contracts. So again, kind of a breather day out there, unless, VIX is prone to having these fits. And all of a sudden it'll do 300,000 contracts in a clip, and next thing you know, we'll have a rock'em sock'em day. But right now, that has not happened. I heard some people talking on our shows yesterday about the March Madness effect. Eyeballs are elsewhere other than the market right now, so there could be some of that going on today as well. Either way, a little bit north of 250,000 contracts on the tape. The big dog, 19,000 of the April 17s today, followed by number 2, 16,000 of the April 13 half puts. Number 3, 12,000 of the April 13 puts. Number 4, right back up to the upside, 10K of the May 40s, 4 O's. And number 5 today, 10,000 as well of the May 24. So maybe a bit of vertical action out there in VIX today. Let's look really quickly and see if I can find what they were doing. I see June 24 is going up as well. So maybe a bit of some roll-in action out there as well. Maybe they are rolling to June. Intriguing stuff out there. May, let's see, that went up. No, they didn't go up as a spread, weirdly enough. The May 24s and the 40s, they went up about a couple hours apart. Intriguing stuff out there, listeners. Let's go out to yesterday. Obviously, still feeling the impact of Powell and company. 864,000 contracts on the tape, so a far more robust day. The big dog, this is kind of interesting, Mr. Rock Lobster. 74,000 of the April 13 put. So I had to go check to see what those were going up for. They went up for 21 cents. I know you and I have joked just joked at the top of the show about puts going to die. In the past, we've had some good, well, decent fortune, I should say, on the 14 strike. 13, I don't know. In this environment, might be a bit of a bridge too far. What are your thoughts? 74,000 of the April 13 puts for 21 cents. You like them? Think that's wasted money? What are your thoughts, sir?
It's funny. I was trying to do so I'm like, when VIX gets low like this, it's like my favorite spot, right? It's because, well, the curve provides a lot of edge, I think. So I was trying to do a 7-by-1 ratio on the 13 and a half. So buy 7 13 puts for 20 cents and buy 1 13 and a half call for $1.40. And again, if we get that grind, I see 35 cents on VIX put, then I get my calls for credit. So I like it in a ratio versus the call down here when you have a long carry. So when VIX dives early like this, and when you have a cash dive and then all the forward vols pull up and you get that kind of big contango, all these puts are like nothing, right? But the fact that you are trading at the lower level is, you're still 1275, and chances are, you can definitely see those like mid 12s. If you're in the cycle early, you can get to that low vol later in the cycle because you don't have to make a whole lot of new lows. You can have a lot of noise in between from a vol point of view, but you can definitely get there. It's easy for VIX to make lows it's recently made. It's hard for VIX to make fresh lows coming from a top to a bottom because we still haven't seen this 2017 low vol in quite a while. And to be honest, I don't think we will for a while, but doesn't mean we can't get to the low 12 or maybe high 11. So yeah, I think there is some. I like that type of trade on a ratio personally, so I see why they like it, and it's a put probably gets to maybe 30, 35, 40 cents. I mean, that might not excite a lot of people, but it does give you a way to acquire those like those long vol units, because you never know. Like, my grandmother says, you never know what can happen in this raging bull market. But I mean, like, you're paying 20 cents and the things are already 35 cents in the money relative, if you're going to buy puts, it's a good place to start because they were 21 cents with VIX trading 16 a week ago.
I was just going to say, yeah, these things haven't
If you're going to buy them,
yeah,
I'm just saying. The call you have to buy relative to that put now, instead of it being, $4 last week, it's $1.30 now. So it's a much better trade.
I'm just going to say a little bit better due this week than last year. Right. There's still 21 cents. Obviously, all that juice coming out with the Fed, but yeah, they haven't budged. So if you're worrying, hey, I missed the boat, listeners, then maybe we're not recommending these. We're just saying they kind of caught my eye as intriguing. Might be a good flash poll. Maybe we put it out to our audience. They are the ultimate arbiters at the end of the day, Andrew. Bought or sold at 21 cents. We'll let them decide. Mr. Jim, what are your thoughts on these? April 13 puts a month ago, 21 cents. A bridge too far or a juicy, tantalizing morsel for your mouth, sir?
You know that I like to leave the VIX option chain to your friends, Mark and Andrew. I hesitate to step in front of that train and get run over. I have been, as usual, spending more time staring at the exchange traded products than I do the options.
That means code word listener. He says it's a juicy, tantalizing morsel for. He's going to load up on these during the show. You watch out, listeners.
He's buying them all.
He's buying them right now. They're running away from me. I'm trying to buy them, and he's lifting the offer. It's Jim. Curse you, Jim. And curse all of our live listeners for front-running me. Maybe I'll put a few of these on. We could talk about these. You like these listeners? Sometimes these trades come across the radar that I know will appeal to a certain segment of the audience, perhaps me included. Let's keep rolling. I know Jim wants to get to his much-beloved VIX ETPs out there. Let's see if I could actually place my order. There we go. All right. To Wednesday we go. 837,000 contracts on the tape. The big dog, 50,000 of the SEP 40s against 48,000 of the SEP 35s. I went looking at that one too really quick. Looks like paper was rolling that listener, taking off the 35s in April for 14 cents and then rolling them out to SEP 40s, so up and out obviously, for 67 cents. They're doing that whole roll, 53 cents. Obviously, you're getting a lot more time. I mean, it does seem on one hand early to be rolling April. On the other hand, we are getting up there. It isn't as early. Obviously, March just rolled off the board. So a lot of people like to roll their upside of their protection, whatever it may be, when it gets to front month. So I could certainly see some logic for that. And there's still 14 cents on the bone, so you got something for it. I'll have to go look and see what they opened them for. Looks like they ended up doing the total volume of 50,000. So it wasn't 1 by 2 like it went up here, 25 by 50,000. But still, interesting stuff. 53 cents for that roll, listeners. Are you down with that? Followed by 38,000 of the April 13 puts, 36,000 of the April 16 calls, and 32,000 of the May 50s, 5-0. So all sorts of funky upside lurking out there. Tuesday, a banger day as well, 895,000. Sometimes Fed days, people sit on their hands. Not this week, putting up some numbers. 51,000 was the big dog on Tuesday of the June 25s. You like those, listeners? Followed by 36,000 of the March expiring this week, obviously, 13.5 puts. And then 34,000 of the April 12 puts, 33,000 of the March 14 puts, and 32,000 of the April 15 puts. Looks like that June, by the way, the June 25s was part of a funky, maybe a short straddle with an upside call kicker. Looks like they went up about 50,000 times, 49,501 print for 97 cents. Hitting the bid, but I read into that a little bit of skepticism. Probably not selling a bunch of that upside because they're also at the same time we're selling the June 17 puts about 13,000 times. And looks like about at least 10,000 of the June 17 calls for 207. So selling that straddle for about 560 almost, or 460. So I can't imagine they're also selling those upside calls. They're probably buying those, again, one of those funky ratios that we've seen before out there, but this time maybe doing it in straddle form, straddle against the upside call. Interesting stuff out there. Maybe our old friend, a broken wing ironfly. Don't see those too often. Monday, the big dog day, 1.08 million contracts on the tape. 93,000 of the March 15s going up for number 1, followed by 67,000 of the March 14 puts for number 2. 49,000 of the April 14 puts for number 3, 45,000 of the June 45s for number 4, and rounding out the top 5 on a decently active Monday, 45,000 of the April 20s. You know what? I'm going to skip over SVIX and UVIX for now because I know Mr. Jim, we can come back to them if we have time, but Mr. Jim, he's all about the UVXY. He is, after all, at the end of the day, the captain, even though he disputes it. He is the captain of the UVXY Defense Force. If you dare to besmirch UVXY or its liquidity or its performance, or maybe you come on this show and say something crazy like, I don't know, UVIX is the superior product to UVXY, watch out. Jim and his cronies are coming at you. Captain of the UVXY Defense Force. Jim, a little bit of action out there in your beloved product of choice, sir. 6:30 coming into the start of the show and actually hanging out still at that level right about now. Down about almost 3/4 of a point from on the week. Kind of light paper today as well. Only 66,000 on the tape. The ADV also working in the wrong direction. 103,000, down about 9,000. The big dog position out there. 18,000 of the 7 calls that are going the way of the dodo today. So if paper's buying those, they got a bit of a frowny face on today. If they overrode them, then perhaps they're looking a little bit happier out there. But also some big news. A little birdie whispering to me, Mr. Jim, we got a reverse split cooking maybe on April 22nd. Is that the truth? I know you have your nose to the grindstone of all things UVXY. What are your thoughts, sir?
Yeah, the reverse split has been announced. I'm trying to remember if it's a 1 for 10 or a 1 for 15. It was a pretty big number. Let me see if I can find it. It's inevitable, right? I mean, these things have to. Oh, I'm sorry. It's only a 1 for 5. Effective on the 11th of April.
1 for 5.
1 for 5.
You know what? I like. It's so just heart wrenching.
I know. I was excited until you said 1 for 5. Then I immediately lost all interest.
It is the kissing your sister reverse split. I'm going out there and saying it. Who wants either of those? 5 for 1 and kissing it. You're both weirdos. Everybody's weirdo. The UVXY people, they're brain dead. What the hell?
Tell them like you feel, Mr. Rock Lobster. Jim, I know you're in with a lot of these people. What are your thoughts on these? We've talked about them before. I think I will charitably call them anemic reverse splits, sir. What are your thoughts? With UVXY, the question I've got, and Andrew might have a perspective, or you might, is, obviously it creates some adjustments in the option chain. And I wonder if there are some people who prefer a more frequent, smaller reverse split versus a less frequent, larger reverse split. Because, the 1 for 5 from just a 1 for 5 in April means they got to come back and do it again, most likely, later this year. So it doesn't make a lot of sense to me. But I have no specific insights when it comes to pro shares. I have no one to talk to. Yeah, I was all excited on the Rock Lobsters. Oh, the reverse split is coming. I didn't get a chance to look myself what it was. I assumed at least 10 for 1. You got to go 10 for 1. I can only assume it's the lawyers and the people who handle the paperwork for the reverse splits who decide the amount because they like getting paid on a more frequent basis. Why else would you do it this way? It's so ridiculous. It's such a waste of everyone's time. I won't use Andrew's colorful analogy of kissing your sister, but I guess I just did. But I don't know. It does have the whiff of that about what are we doing, Jim? What do we do? I know you love this product. You're the captain of the defense force. I demand it, sir. Defend this move to me.
I resign. I resign immediately.
That's it. That's what puts you over the edge. No more are you the captain of the defense force. This split was enough to push you over the brink. Yeah, I don't see the point of, outside of, we could debate this endlessly. We have before. Outside of the, again, charitably anemic reverse split, anything else catching your eye in UVXY land, sir? I know you love this product. This is your chance. Fly your flag, sir.
Well, so what I've been looking at actually across the, long and short of it, right, with no backwardation in the term structure, VIX below 20 all year long. We've only had one day where the S&P moved plus or minus 2%. We were up 2.1% on the 22nd of February. So we're just in this nothing zone. But it's also been quite a bit of chop and what I would call a bunch of head fakes. As an example, if you look at the pricing of these guys, you had UVIX. I just looked at 4-day moves in these things. And in January, UVIX was up 17% over 4 days, followed by a drop of 22%. It was up 20% in February over 4 days, and then it dropped 16%. It was up 13% over 4 days in March, and then dropped 16%. So we've moved on from the nothing burger to the whack-a-mole, and likewise, if you look at a chart of SVIX from that bottom in late October, to the middle of December, it was up 60%ish. And then this year, it's up 9%, down 9%, up 12%, down 5%, up 8%, down 9%, up 9%, down 4%. It's just been, Benihana slice and dice, whack-a-mole, with no clear trend. The S&P continues to make higher highs and higher lows, but we're getting chopped up whichever side of the vol trade you're on. You're facing knives.
Benihana slice and dice whack-a-mole. We might have a title for our episode this week, Mr. Jim. I don't know.
You heard it here first.
Tell us how you really feel, sir, about the trading out there. Mr. Andrew, I know you're like me. UVXY, not your go-to, not your first choice, and certainly this meager reverse split, let alone the Benihana slice and dice whack-a-mole. Make sure I said that correctly. Not maybe driving you to trade it more, but any thoughts on what's been going on out there in UVXY before we get to the most difficult part of the show?
Well, it's certainly a more G-rated title than mine.
Yeah, I don't know if kissing your sister is making it into the title anytime soon.
No, probably not. But it's certainly it might change. It might move you up on the algorithm.
Might get some flags on certain. Yeah, might get. Only fans might be all over it at that point. We never know.
Exactly. It'll attract all the freaks. Way to go. UVX again. It's when it's like 6, 7. There's just not a lot of trade on it. So I like the vol products when they become interesting to trade, and then when they become interesting to trade, I just put them in a box and wait for them to become interesting again. And I think that's kind of where we are. 5 for 1 is a ridiculous split, to be quite honest. I think at minimum 8 to 1 would be nice. Like get it over 50 or close to 50. But it will decay. It will be fun to trade from $30. That you'll have that one day when it's $30 when it splits, and then it'll all be gone. And it'll be fun to trade down to 15, and then you're all done. So we're going to get 6-7 weeks maybe out of it, or the market could do something. So anyway, yeah, that's what I would say there. I don't know. It does. I do laugh when I see some of the volume that does go across the tape in it. Like, everybody just basically just buying calls, waiting for the market to go the other way. When the daily headwind in UVXY, what is it? What's the theoretical decay? It's actually, it's not. But for a small stock, yeah, it's 6 cents a day headwind. So it's 30 cents a week UVXY right now. Like 30 cents in a $6 product. That's 5% a week. The thing's going to decay. So you have to catch a good move in UVXY to even get back to even. So anyway, I love the products. I think the reason I love the products is because 90% of the people that trade them have no idea how they work. But other than that, we'll just wait till the 22nd.
But there's no more waiting on the show, listeners. It is time to get dangerous. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
Well, easy spoiler alert for the crystal ball today, listeners. Nobody had a 12 handle. Everybody was feeling more juice, myself included. I was the lowest at a 1535. And spoiler alert, we are nowhere near that at the end of the show. I said we were at about, a 1290, maybe a 1280 when we're kicking off the show. Coming in even more, about a 1260 now, which, by the way, I am the bid now, Mr. Rock Lobster, on those April 13 puts. I went in, took over the bid, and let's see if they fill me out there or not. Maybe not. They might squeeze me. They are right now. We'll see. Stay tuned to Options Oddities, see if I get filled, listeners. But yeah, a long way around. Andrew is at nearly 16. No joy for him. Our buddy Rob DeArco from Rival last week, also at 16.5. No joy for him. Speaking of joy, a lot of you are liking those puts. We put it out to our audience. you were a buyer or seller of those April 13 puts at 21 cents. 75% said you're a buyer. By the way, I did go in at 22 cents. I did carp the market. They were 21-cent bid. So now I am the bid. I'm paying a little more than that. So we'll see if I get filled out there. But a long way around to saying no winners this week on the show. And Mr. Jim, that means you get the pride, the dubious honor of going first. What are you feeling for VIX this time next week, sir?
So in Mark's absence, I will contribute some palindromic nonsense.
Oh, no. You're going that way, too?
Somebody's got to do it. We're going 12-21.
Dude.
The meatball will be honored by your token acknowledgement of his existence. Well done. 12-21. All right, Mr. Andrew, next up, what are you feeling for this time next week, sir?
I don't want to scum him, but I'm going to, because I had my number ahead of time. He did the 12-21. I was just going 12-12.
Oh, 12.
Low, we're going to print a low for the year.
So not quite palindromic nonsense, but pretty darn close. And last but not least, yeah, I was feeling more upside. Now, if I buy these puts, I have to go downside, right? Listen, I have to talk my book. I don't know. I don't see 12-12. I wouldn't hate it, especially if I get filled today. I'm going to say not that dissimilar from where we are now. I'm going to say 12-45, kind of a meandering week. So that's your vol market. That's your show for this week, listeners. There we go. A little bit of the ye old theme music. But before we go, Mr. Jim, if folks want to get out there to debate about the volatility goofballs and the term structure, or maybe, how did you put it, the Benihana slice and dice nonsense in UVXY, where should they go? What should they do?
Well, the easiest way to find me is on the X, the Twitters, at VIXologist. I make myself available there. And Ballast Rock Private Wealth. If you Google that, you'll find me there too.
Give the man a follow, especially if you love all things UVXY, because he, despite what he says, he is the captain. He wears the t-shirt. He raises the flag of the UVXY Defense Force. Unless even he can't defend this garbage reverse split, listeners. And Mr. Rock Lobster, if you're done kissing your sister, sir, where should folks go if they want more pit in their lives?
Yes, optionpit.com, 888-TRADE-01. If you want to see all the vol trades I put on every week, become one of our pro members. You just hop into the chat room and you get a live consciousness stream. You might not want that, but that's what you're going to get. The students that have been with me for going now over 11 years, unbelievable, but true. Mostly because they like the idea flow. So anyway, optionpit.com if you want to get your vol trading on.
Stream of consciousness with the Rock Lobster. Terrifying, some might say. But if that is your cup of tea, optionpit.com is the place to go. We got to get on out of here. For all of you joining us on the on-demand side, on the podcast side, that will conclude your broadcast week with us. Thank you for joining us throughout the week. Remember, if you missed anything on the network, it's all there. 17 plus years of great options and volatility goodness for you to check out. So if you missed anything, it's all there for you. Make sure you subscribe to the full network on your podcast platform of choice. And if you want a little bit extra, maybe you want to come back in a little bit, see if I'm filled on these VIX puts and all the other trades we did this week, as well as all the other trades we spotted that are interesting and weird. We've all said before, you come out of Options Oddities, if you don't have a couple, at least, nuggets to chew on and say, I want to investigate that further, then you're just not listening hard enough. TheOptionsInsider.com/pro is the place to go to learn more. Then we're back again on Monday for a little bit of the old OB all the way through to next Friday, another episode of Volatility Views. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.